Hello and good evening to Lottie Dottie, everybody. It's Tim Davis coming to you guys from the Bullish Bears team. And I'm coming to you guys just to bring you guys a quick video on my outlook of gold for the rest of 2017. But before I do that, for those of you who have not done so yet, please take some time out of your busy time to visit our website at www.bullishbears.com. Once there's a lot of information in here that can be helpful and useful. You can have access to all of our social media platforms by clicking on, when you get to our page, you can click on these tabs to get to our other social media platforms. We also have a Skype room where we all go over trades and trade ideas. And you can come to this page, to the About section. About halfway down, you'll see the tab for Trade Room. You click on that, and it'll bring you to this page. And just simply type your name, email address, hit subscribe, and we will add you to our free Skype Trade Room. Also, for those newbies, if you're interested in some coaching, we do some a little coaching, one-on-one coaching in different aspects of the market. As it relates to technical analysis and charting, learning how to read and analyze charts. Also, you can come over here to our courses tab. We do stock. We have stock trading courses, momentum trading courses, option trading courses. Some basic information to help you get started. For those who are new, need some more information or more help. And like I said, we have other social media sites as well. And you can click on these tabs and get to our other social media sites. We have Twitter, Instagram, believe it or not, YouTube. And be sure to make sure you subscribe to our YouTube channel, you guys, because there's a lot of information there where we have a lot of our videos there that are also of good help and of good use. As soon as it loads here, I'll just show you our YouTube channel briefly. Okay. And once you get there, you can have access to all our videos, all our playlists. Make sure that you subscribe to our YouTube channel so you won't miss any of our content. And as you can see, we have a lot of content on our channel that will help you with different platforms that we use Thinkorswim a lot. We use some other resources. We also post some updates on charts, particular stocks that we like. Some symbols that we'll probably be interested in getting into, different aspects of technical analysis. We show different tools that we use, and we do a lot of stock review from time to time, and stock option reviews. Okay, that's our YouTube channel. So please be sure to join our YouTube channel, visit our YouTube channel, and subscribe. Our Facebook page is simply called, look at the top left, it's called Stock Market Community. It's not titled Bullish Bears, but our background banner does have our Bullish Bears logo. Name of the community is Stock Market Community. And we share a lot of information here as well. So be sure to join our Facebook page. And right now we have a little over almost 14,000 members now there. So be sure to join our Facebook page as well. So you can reach that by going to Facebook, typing in Stock Market Community, look for the Bullish Bears banner, or simply, like I told you before, just visit our website, www.bullishbears.com. A lot of content here while you're here. And tap on these icons. Guys, we do a lot for this community, trying the best to put a lot of tools together all under one umbrella. Sometimes it takes a lot of time, a lot of effort, a lot of money. So contributions are welcome. Just click on our contribution tab to assist us with that. And we also have, like I said, we have a Twitter account, so you can follow us on Twitter, follow us on Instagram, and anything else you may see on our website that you can follow us, please do so. Okay? All right, now let's get to my update on gold. All right. One thing I noticed, you guys, and I did a video the other day on balance volume, on balance volume, which I like very, very much. It's another technical indicator that I use on some of my charts to get a some type of sense of direction on the overall market. And one of the things I did is I made it as an overlay over top of my RSI, and because sometimes RSI can be like a lagging indicator as to what's happening in the market. So I just use on balance volume to give me another sense of direction. All right, and with gold, a couple things I've noticed, and I'm going to point out a couple things here. Then I'm going to also show you what I see on our thicker swim charts. Look at our on balance volume, which is this black line here, and I also have it at the top in RSI. Down at the bottom here, I have it at the bottom along with my Arun oscillator. What you'll notice is that the overall movement of gold was to the upside since 2009. It's been to the upside. It made a bottom right here in 2010, and then since then, it pretty much did a little rally, did a pullback, and now it is staying. This on balance volume down in the Arun indicator, Arun oscillator, is staying above the zero line, which is what you see here. And it's been hovering around here, so it's been pretty much hovering around the zero line. I think it's ready to break out to the upside, so that's one thing I'll be watching. And I'm going to show you something thicker swim, but as you can see, we made this march up from 2009, and this is a chart I'm looking at as a weekly chart over the past 10 years. Made this march up from 2009 all the way up to $185, and this is the gold ETF, you guys. I'm going to show you guys actual gold futures contract as well. Gold ETF made it up to 185, then it sold off drastically. But one thing that you'll notice is that it did not sell all the way off back to the 2009 lows. However, it stopped right about at $100, and then it took a move up. So I think this was the pretty much Fibonacci retracement pull back there, and I think gold is ready to go higher. As you can see, it marched up from 2015, 2016, back up to 131. Did not make it all the way back up to that 185, and it pulled back. It did not create another low. So in other words, you got a low here, you got another low here, but it's not a lower low. It's a higher low from this $84 over here. Then it bounced down, made a low of 100, knocked down to the 84. Went up again, made another low down to 107. It's not making lower lows. And when you don't see it making lower lows, normally the market wants to go higher. Then we made it down to this 114. I'm looking for this 114 to be a base, and I think this gold market could go higher. Now let's take a look at let's take a look at the gold futures contracts on Thinkorswim, my Thinkorswim chart. Let me get it to load up here first. All right, now I already did some Fibonacci retracement on here, and the first chart we're gonna look at is a 3-year weekly chart. And what you'll notice is that around October 2014, this is where this starts at. You can see how the gold market pretty much bounced down. It went down to $1,045.40, where it pretty much found a nice little base. We marched up to $1,377. Then gold sold off, and this was 2016 around April. It pretty much made that high of 1377. Then traded around, in this little boxer area for a little while. Then it sold off all the way down to the the end of 2016. Then in 2017, what you'll notice, around towards the end of 2016, it started to march higher, but it's not like making a huge run or a fast run upward. So we made it back. We made a nice little Fibonacci retracement touch. It didn't go back down here. Remember, I said when you create higher lows, the market tends to want to go higher. Made a low here of 1045. It retraced back to the 78.6 retracement level. That's a huge retracement. Did not make it back down here to this 1045. Stopped at this 78.6 retracement and marched higher. got up here to this level, which is about the 38% retracement, and then marched down to about the 50% retracement. Went back up to the 38, tested it. I'm sorry, this time it went up to the 23.6 retracement, tested it, marched back down, stopped at around the 50% retracement, went back up to the 23% retracement, marched back down to the 50% retracement. Now we're back at the 23 again, around this 1274 level, 1274, which is where we're at now, about 1274. I'm looking for this market to do one of two things, either to go back to this 50% retracement, which is 1217, but I honestly believe that right now we're in the process of going back to at least 1300. 1300 will take us back up to the 23.6 retracement, you guys. So around 1298 pretty much. It'll take us back up to the 23.6 retracement. And right now, I think the gold futures are sitting at 1274. 1274. I think we are headed back towards 1298. So let's see what happens. And we done tested this level, this 1298 level. 1, 2, and this will be the third time. I think third time's the charm. I think we can break it. So we'll see what happens. I think we can break it and probably head back up towards that 1377. So we'll see how it plays out. That's how the weekly chart looks on the past 3 years. And I'm going to show you some more history, because a lot of people tend to focus on the here and now. But if you want to really take advantage of some of these moves, you can't just focus on the here and now. You got to be looking at some longer term information so that you can get a better feel of what this market has the potential of doing. Remember, it's creating higher lows overall. And let's look at show you guys a daily chart over the past 6 months, and then I'm going to look at a monthly chart and show you guys what I see. Now, TTM squeeze normally gives you some insight of what's happening with the market. Had an up move for a little while, then a down move. It goes below the little T line, and it goes up, and it goes down, and we're marching up again. It may be cycling back down, but we got to see. It may continue to go up a little bit higher than what it is. It could be cycling back down, maybe halfway, and then trickle back up. I'm looking for this market actually to continue to go higher, back up to this 1298 level. And as you can see, what this thing did was back in, I want to say this was back in February, around March of this year. In March of this year, we made it back down to, we went all the way down as low as 1195. Then we started to march back higher until we got up to this famous 1298 again, around this $1,300 level, and it failed. But guess what? Did not make another low. It did not go back down to this 1194. It made a low, but not a lower low. So it stopped right here at around 1214. Then it marched higher again, all the way back up to 1298 again. That's a double test. 1, 2, and then we marched all the way back down to about that 1208, 1214 level again. So it made it to this area. 1, 2, 3, triple bottom after coming off of these lows from back here. Triple bottom. I'm looking for this thing to go higher. So I'm looking for us to try to test this 1298 again between now and October. So that's what I'm looking for this market to do. And right now it's making a pretty good run for it. All right. So that's what the 3 year weekly chart looks like, and the 6 month daily chart looks like. Now I'm going to show you an overall outlook. So we're going to go take a look at one more chart. Yes. All right, let's take a look at one more chart. Let's take a look at a 10-year monthly chart of gold. So if you look at the 10-year monthly chart of gold futures, we created a low back in I want to say this was 2007, created a low of $646.40. Gold market marched up all the way up to 1923. That was created back in 2011. And as you can see, market kind of tapered off and sold off. But it did not create a new low. So it did not get back down to the 646 at all. It got right about here, which is around, I want to say that was around, put a little mark here, okay. It's around 1045, which is where it pretty much stopped at and decided to go higher. Well, if you look at the other side over here, 1045, this was a pivot point right here. Right here back in 2008, and it hit that point once before and retraced. That's a pivot point to me. And we're at that point, and we made that point, hit that point again right here in 2016, right? At the end of 2015, beginning of 2016. Marched higher, came lower, went lower to 1123. And we're up here to around about 1274, which is right around my head. And one thing I noticed is that if you look at the parabolic SARs, when parabolic SAR is normally on top, that means it's a bearish move. That's a bearish move. Parabolic SARs is on bottom, it's a bullish move. This is a long bearish move right here. Then we had a bullish move. Then we had another bearish move. And what I like is that whenever it touches the it touches the price candles, only when it starts to touch and it gets real tight and real close. Right here, it touched here and then it flipped. And you have the parabolic SARs on the top, which represents a downward move. I'm looking for parabolic SARs to pop on the bottom and take this market higher. So we'll see what happens. But it looks like there's a base here. We have not created lower lows. I'm looking for gold to continue to go higher. You guys, it did a nice retracement all the way back down to this point back in 2006, end of 2015. And it started to go higher. Just because you guys you haven't seen it catapult up, like consistently. There was some ups and downs over the past year and a half or so, but it has not created a new lower low, which was set back in 2016 at 1026. We haven't got that low yet. Went higher, then we dropped back down to around 1105. So from a low of 646 over to 1044 up to around 1123. I think we go higher from here. All right, so that's my outlook on gold. Please, you guys, if you would like to continue to follow us, please don't hesitate to go to our website. Once again, go to our website, you guys, www.bullishbears.com. Look over our webpage. There's a lot of information here that can be helpful and useful. Please join our other social medias, our YouTube channel, our Twitter page. We have Facebook. Email us. If you got any questions or comments, we have Google. Also, we have a trade room you can join us and follow us at. So please visit us. Also, Instagram, YouTube. Did I mention YouTube? Okay. All right, you guys. Hopefully, you guys learned something today, or I gave you some information that can be useful. Have a pleasant day. And again, this is Tim Davis from the Bullish Bears team signing off.